Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we look at how manufacturing fared in October. We'll take a closer look at one of the reasons thousands of Kiwis move permanently to Australia each month, and we'll review an important forecast of what will happen with real estate prices in the next few years. Finally, we'll wrap up with what the other media are reporting. The latest release of the index that measures the temperature of local manufacturing, the PMI, shows the sector in remarkable health. Activity rose across the board in this important lead-up month to Christmas. Every region benefited from this improvement, especially Otago and Auckland. The strongest sectors were the chemical and resource industries, the food and beverage industries, and the wood and paper manufacturers. Rises in new orders, in production levels, and deliveries made all contributed strongly to the overall index. Manufacturers have struggled to adapt to the strong dollar, but the sharp improvement in competitiveness the Kiwi dollar's had against the Aussie dollar is obviously helping. The PMI index has only been this high on a handful of other occasions since 2002, 5 years ago when this survey began. Perhaps it's easier to understand why so many of us are migrating to Australia when you look at the income differentials between the two countries. Even before you consider the tax rates, and there Australia has a huge advantage, gross average earnings for a full-time worker are significantly higher there than here. The numbers might surprise you. The Australian Bureau of Statistics has just released its averages, and they are impressive. For a full-time worker, including overtime, the Australian average is $1,153 per week, as at the end of August. As at the end of September, Statistics New Zealand says the same average here is only $873 per week. Convert them both to New Zealand currency, and this gross differential comes in at more than $470 a week advantage for being in Australia. And that is before you factor in the lower Australian tax rates. It's no wonder there's a mad dash across the ditch. As reported yesterday, New Zealanders have now replaced Brits as the top source for Australian migrants. Think about it, $470 per week is a lot. That's $24,500 per year, and that is just the extra you can earn on the average wage after spending just $315 on an airfare. The sooner the public policy people in Wellington wake up to this crisis and do something positive, the better. Substantial tax cuts and income tax indexing would be a good place to start. We're in a competition for skilled people, and the Aussies are winning. Good grief, Wellington doesn't even seem to realise the game is on. Westpac has released its outlook for New Zealand house prices, and it is an intelligent review with a compelling forecast. Our housing market has slowed dramatically. Since April, there's been very little price growth. In fact, sales volumes have fallen significantly, and on the face of it, the housing market looks ready for a big fall. High interest rates are now hurting the market, and there appears to be no relief in sight. Houses are now grossly overvalued and investor returns are poor. Current prices do not allow for a sensible investment return. But Westpac argues that with the combination of the strong economy and artificial shortage of housing, prices are not likely to fall. They say that the bottom end of the market will be the weakest in future, but that overall house price inflation will wallow a few percent either side of zero for the next 5 years or so. The current housing downturn is peculiar because it is occurring in the midst of a relatively strong economic growth. Other house price downturns occurred when the economy was weak. But that same strong economy will not leave any room for the Reserve Bank to roll back benchmark interest rates. So we'd better get used to the idea that housing will likely remain a poor investment for years to come and unaffordable for many young people. And finally today, a wrap-up of some other items of interest. Fisher & Paykel said it is considering selling its finance company, having received a number of unsolicited approaches in recent years. It said its finance business was performing well despite current problems in the finance company sector and had stable debenture reinvestment rates. In our opinion, GE Money is the obvious buyer, and as GE has a huge international whiteware business as well, perhaps more than the finance company could get swallowed up. There were no surprises in the level of foreign exchange turnover of the New Zealand dollar in October. Spot trading transaction volumes were pretty average at $32 billion, as were volumes of forward contracts at $10 billion. The really big volumes are in foreign exchange swaps, and these volumes came in at $235 billion for the month, also about average. You can get more news and start with Newsmaker Views on our news page. Join us again on Monday for the freshest finance news on the web. We'll see you then.